Welcome back. We're now in the middle of 2025, and Ethereum has not really been performing that well through the 2024 and 2025 crypto cycle. But now, is the $10,000 price still realistic in this cycle? That's what we're going to be discussing today. We're going to go over all the metrics, all of the geoeconomic situation, and also, we're going to go through all the metrics of the network, and not just Ethereum, but also layer twos built on Ethereum, because a lot of people don't really combine those ecosystems. But if you really think about it, everything built on Ethereum should be rolled up into the Ethereum's overall valuation, because take a layer two like Polygon. Polygon is the most widely used layer two, more used than most layer ones. And so therefore, because it's built within the Ethereum ecosystem and using Ethereum for finality of the blockchain state, Ethereum really should be taking on the layer two ecosystems. And so the real valuation of the ecosystem is significantly more. But then why have we seen coins like XRP and Solana really outperforming where Ethereum is in this cycle? Well, I'm going to talk about the thesis, about the $10,000 price. We're going to talk about the metrics. We're going to talk about the charts. We're going to talk about what the billionaires are saying about this coin. And at the end of the day, it's not about how we feel about this coin or whether we want it to hit $10,000 or not. It's really about what is going on in the ecosystem of Ethereum that will bring us to this valuation. Anyway, this is the Cryptoviser podcast. Don't forget to give this video a free thumbs up. We do a lot of deep dives into different cryptocurrencies on this channel. And today it's all about Ethereum, because we are now 12 to 18 months after the Bitcoin halving cycle. That's the time frame that we are in when I'm recording this video. And the 12 to 18 months after the Bitcoin halving historically is the most volatile and when we see the most uptrend in the market. And so while a lot of people are fudding Ethereum and still focusing on Solana, they're not realizing what is happening right now under the hood with Ethereum and the development of the ecosystem. And not only that, but really the demand for the Ether coin. Let's get right into today's topic. So first we have to understand what is going on currently. Now again, we're in the middle of 2025 when I'm recording this video, in the 12 to 18 month period after the Bitcoin halving. And I believe we are now in the uptrend towards the final phase of this bull run. Regardless of what everybody else is saying in the market, the other influencers, the other analysts, personally, I believe this is the rip to sell into, right? Because this is the liquidity that the market has been looking for. As more institutions get involved, as we're seeing upgrades to these ecosystems to make them more robust in the way that they'll be able to be integrated into traditional finance, and traditional finance will be able to bridge, legacy assets like dollars, like CDs, like gold over into crypto. And so Ethereum price has now been green lit after what they call a surprise 29% Ethereum rally. And effectively, like if we look at the last year, I mean, this is the price of Ethereum over the last year. It's been basically in a downward slope, which doesn't make sense because we are in a bull run, right? After the Bitcoin halving, typically the market is adjusting, and that's where you see where the bull rally is. But we haven't seen that. A lot of the focus has been on Solana, meme coins, and nonsense like that. And so where do the fundamentals lie? Well, what we've been talking about for months now on this channel, effectively, I came back to the channel in the second month of the year. Since then, we've been talking about this upgrade that just went into effect on Ethereum called Pectra. This enhances Ethereum's flexibility, scalability, staking mechanism, and gas payment options, and also other tech improvements under the hood. Now, what I've explained previously is that typically and historically, these kind of events, these upgrades, either see a buy the rumor, sell the news, where people are buying into the upgrade, which we didn't see happen with this upgrade, right? I mean, I think this is just because of the macro ecosystem of crypto and stocks kind of taking a downward slope at the beginning of 2025. But the other option would be after the upgrade, people start buying into, oh, wow, Ethereum's better, Ethereum's faster, Ethereum is what all the institutions are looking at and using. It's not Solana, right? What has Solana brought us this cycle? Really, what has any of the other ecosystems brought us? There has not really been that many announcements of groundbreaking technology that is being released besides like the AI realm, and that's also very limited to a few different cryptos and maybe real world asset tokenization. But other than that, there's really no narrative this cycle besides meme coins. And so because Ethereum didn't really jump on that bandwagon, didn't really get a lot of attention over the last year, and it's been really dropping. And a lot of people say it's over for Ethereum. Ethereum's done for. Nobody's interested in buying Ethereum anymore. But when we actually break down the fundamentals of the top cryptos in the market, I mean, again, when I'm recording this video, it's still the number two crypto. It's about 1/10, a little bit less than a little bit more than 1/10 of the market cap of Bitcoin. So still the gap between Bitcoin's market cap and Ethereum's market cap is very wide. And the market cap between Ethereum and the next largest crypto, which is XRP, is also very wide, basically almost double. No, actually a little bit more than double. And so there is big gaps here. But that shows that Ethereum is still number one by a large factor. I mean, even if you look at it compared to Solana with a $90 billion valuation, Ethereum is almost $300 billion. That's a big difference. And so Ethereum, in my view, is a great trade, right? Because there's a lot of things going on and the fundamentals behind Ethereum are there. I mean, we're gonna talk about the layer twos in just a little bit on this video, because the layer twos are also very important. A lot of people don't focus on the layer twos. And Solana ecosystem has been saying that blockchain doesn't need layer twos because the base layer should be able to do everything. Although we know that that's not accurate. But Solana lacks convincing signs of besting or doing better than Ethereum. According to Sygnum Bank, crypto banking group Sygnum says they don't expect Solana to beat Ethereum in the medium term, partly due to the blockchain's revenues being tied to meme coins. Well. Clearly, the analysts at Sygnum watch the Cryptoviser podcast because that's what we've been talking about on this channel since the beginning of the year. Like, think about it, guys. Hundreds of billions of dollars was put into development over the last few years into all these crypto ecosystems. Solana specifically, I would say billions was probably put in to developing and growing out the ecosystem. And now we're in the middle of the cycle. We're really towards the end of the Bitcoin cycle of 2024, and Solana doesn't have anything. I mean, we're literally 5 months after the meme coin fiasco, and people in Solana are like, Cryptoviser, you're just fudding. Solana has a lot of stuff going on. I'm like, okay, what? Right? It's 5 months after the meme coin fiasco, and they haven't released any new technologies, any new AI capabilities, any new real world asset tokenization stuff, like things that Wall Street and big banks and billionaires are really going to want. Nobody is getting. Anyway, we're not going to get into the meme coins because then the whole video will be about how ridiculous meme coins are. For today, we're talking about Ethereum. And so I would agree with this. According to the bank, they say Solana has yet to show convincing signs that it could surpass Ethereum as the preferred blockchain for institutions, as its revenue, heavily reliant on meme coins, is considered unstable. And we've covered this in a previous video where we showed from, I think, December into January, the revenue, from December to January, where the revenue was versus where it was in February into March, it was like a 97% drop because people, the meme coin situation blew up and people stopped trading them. And so every other metric on Solana dropped significantly. And so the valuation behind Solana, if you look at the really fundamentals, was just being pushed up by meme coin fiasco. But none of that was real things that, institutions or businesses are going to implement on the back end. It's like the same thing from the NFT craze from last cycle. And that's why, again, I think that we're in the final phase of the cycle. Because in the last phase of the cycle in 2021, it was NFTs. Everybody was pumping billions of dollars into NFTs, right? Into building the ecosystem, buying and trading. Meanwhile, they're now worth basically nothing. And they're not going to regain or reclaim their all-time record highs. This is why we have to go back to the fundamentals and really understand what are we in this all for. And this is what the banks are looking at. Sygnum Bank said the current sentiment around Ethereum remains poor, with the market focus on Solana's transaction volume and recent dominance in fee generation. But the bank said that the, quote, medium-term outlook will primarily be shaped by traditional financial institution platforms' choices to bring their product offerings, not by sentiment. I agree. It's not about how you feel about the market and like, oh, well, I think that Solana's better. Honestly, the banks and Wall Street don't give a F what I think or what you think. They don't. They're looking at the fundamentals, they're looking at the metrics of these networks. The bank said, we do not yet see convincing signs that Solana would be preferred choice as Ethereum's security, stability, and longevity are highly prized. Signum argued that institutions could choose Ethereum over Solana as the market has viewed Solana revenue generation as less stable due to the highly concentration in the meme coin sector. And they said this will limit outperformance, as it could be argued that the differential in valuation is accounted for by the difference in revenue sources. And I would agree. I mean, Ethereum's revenue sources are large institutions that are using their smart contracts to, implement financial decentralized finance. The meme coin nonsense is just people playing games and trying to extract billions of dollars out of the market. It has nothing to do with fundamentals. And again, so goes back to the question: is Ethereum really undervalued? And by the way, I want to know what you guys think down below in the comments of the video. Don't forget to also, while you're down there, give the video a thumbs up if you like these videos. Click subscribe. Also check out my other videos. We got a lot of content on this channel. I give you guys my unbiased opinion. The only way I make money on this channel is from YouTube revenue. I do not have sponsors. Nobody pays me. These are just my opinions, and you're free to have yours as well. And if you disagree, I really want to know what your side is, because I want to be open to potentially being incorrect. But when we're talking about $10,000 Ethereum, we're really going back to the fundamentals like we were just talking about. The bankless guys, Ryan Sean Adams, obviously an Ethereum maxi, he said Coinbase bought 21,634 Ethereum last quarter for their treasury. And so if we multiply that by 2,000, it's about, I don't even know, I can't do the math that quick. So let's just pull up the calculator. 21,634, and we're now at about $2,400. And so that was $50 million in just one quarter Coinbase purchased. That's Brian Armstrong, the CEO, making a $55 million statement of faith in Ethereum as a store of value. Brian is always early. Coinbase now has almost 140 Ethereum. That's over 0.1% of the total Ethereum supply. $315 million worth. Cheer them on. It's great that Coinbase built a layer 2, it says. You know what would be better? Coinbase adding 250,000 Ethereum to the balance sheet. Listen, are they going to continue to acquire? Probably. Is this really going to make a big difference? No. But what it does show is that Ethereum is the chosen alternative to Bitcoin. I didn't pull the video up on this for this video that we're talking about right now, but there is a interview with the BlackRock chief investment officer recently, and she said that their BlackRock and institutions are looking at Bitcoin solely with a minor focus on Ethereum. Specifically, she said something like, we're looking at Bitcoin, and a far distant second is Ethereum. It wasn't like it was even close. It was a far distant. And so Ethereum is on institutional minds, but they may not be investing as much as they are in Bitcoin. But then you also have to remember, institutions are not really also investing in Solana, right? We have to keep an eye on this, because remember what happened last cycle. All these companies and all these retirement funds started investing in FTX. Not Coinbase, not Gemini, not Kraken. Those are the most highly regulated crypto exchanges in the United States. They were investing in FTX, which is completely absurd. And now we're hearing a lot are investing in MicroStrategy. But I would imagine we're going to start seeing a lot of these institutions and things kind of moving some, right? Maybe they're going to have 95% Bitcoin and 5% Ethereum in their crypto holdings. But that they're not looking at the other coins, at least not yet. And when they do, believe it, they're going to already be in Ethereum. So it's going to be very unlikely that we're going to see the banks or other institutions saying, well, let's just buy Solana instead of buying Bitcoin. There are some companies that are doing that, but most of them are going to go Bitcoin, then Ethereum, and then something else. But that something else will be probably much further down in the future. And so, yeah, Coinbase holds 137,000 Ethereum. This is from their March results from Q1. And again, all of this information is public because they're a publicly traded company. Now, we also recently heard from Peter Brandt, who is a legendary chartist and futures market trader. He wrote on X, I usually go out of my way to not say anything good about Ethereum. You can call it hating. I guess you are right. But this congestion pattern could soon support a moonshot. And so I saw this, and listen, as I always tell my viewers, I always take these little pieces, these little tidbits of info from these chartists or analysts, and I just add it to my research portfolio. And then I take all of that blended information and come up with my own thesis. Because sometimes these guys are wrong, sometimes they're right. And, what is a congestion pattern? Is he going to be right here? Well, in trading, congestion is when the price is trading around a particular level without making any progress in any direction. Not only is the market moving sideways, but it does so in a haphazard manner and often with high volatility, which renders the price action choppy. Although market congestions may not be tradable, congestion zones, however, can be put to good use because they represent areas in the chart that have seen much trading. So effectively, a congestion pattern means that the supply and the demand are kind of equal in the trading space, right? And so congestion in the financial trading world is a market situation when the price is trading around a particular level without making any progress in any direction. When there is congestion, the market is not only, when there is congestion, the market is not only in the market moving sideways, but it also moves in a haphazard manner and with high volatility. And remember what I said, 12 to 18 months after the Bitcoin halving is usually the most volatile time that we see in the crypto markets, typically to the upside. In this market situation, demand to buy financial instruments is often matched by the seller's supply, which results in the price not moving significantly and instead maintaining a price action that looks congested. Congestion periods are marked by sideways price movement, showing the balance between buyers and sellers. However, the sideways movement does not have an established upper or lower boundaries as the price swings pretty randomly. So that's very interesting stuff. And effectively, we're not going to get into congestion trading, but you can see here an area of congestion, right? Where the market came down and then it was just trading in kind of a sideways pattern, but a lot of volatility. Again, they're saying that the trading of buyers and sellers is almost equal. Well, what happens when something's equal and then it becomes imbalanced? And so think about a congestion pattern with Ethereum, because I agree with what Peter Brandt is saying here in terms of, the chart shows what's been going on. Plus, we've been seeing a very tight range in Ethereum while a lot of the rest of the market has had more volatility. And so when we take all of these things into account, what I see tight range, meaning buyers and sellers is almost even. But what happens when the buyers run out of supply, or the sellers run out of supply, or the buyers run out of money? So if the buyers run out of money, but the supply is still the same, the price would probably go down, right? Because there's no demand, or there's less demand because the buyers ran out of money. But if the sellers run out of supply, at least at those prices, but the demand is continuing to stay the same or increase, typically you would have a price movement to the upside. And I believe this is what Peter Brandt is alluding to, similar to this example on the robusttrader.com, which shows a downward move and then this choppy congestion pattern and then a major move back up. Now, again, this major move back up only brought it to the previous level, but then it took a little bit of a dip and then went higher again. The other thing to keep in mind is the moonshot is from this level. So if you purchased at this higher level and we've come down from them, you may say, well, this upward trend wouldn't be a moonshot for me because I bought at this price. Well, this is why people buy the dip, because then that dip, if it goes up 200% or 100% or whatever the number is, then you may have a loss or be even up here, but you're going to have that profit from down here. And so this is why it is important in trading to also have money on the sidelines at all times, maybe 10% of your portfolio or 20% of your portfolio. Some people 50, 60% of their portfolio is in cash. That way they can deploy during these times of either congestion patterns or major dips in the bull uptrend. That's where you hear buy the dip, buy the dip, buy the dip, buy the dip. I mean, over the last few months, if you, especially in Ethereum, I mean, over the last year, if you've been buying the dip, you're still lower, right? Because we're at lower values than we were 1 year ago. 1 year ago, we were at $3,000 and even higher than that, or earlier in the year. Anyway, so this is what Peter Brandt is saying about the congestion pattern and a potential moonshot. But what else is going to determine this moonshot? Well, we've seen recently a reversal in the Ethereum ETFs. Remember what I keep telling my viewers. And again, this is why it's super important that you guys subscribe to the channel. That way you can follow a lot of these discussions that we have. Because if some of this doesn't really make sense to you, or you don't really have the background to, what I'm talking about in these specific situations with, what happened with the meme coin situation or whatever, subscribe to the channel, because we talk about this on a regular basis on the channel. And the more that you hear it, the more that you understand it, and that will kind of eventually blend into your understanding in the market. But either way, I've been talking about the Ethereum and Bitcoin ETF flows for a while. What we have seen is, yes, Ethereum has significantly less flows than the Bitcoin ETFs. But remember what I told you just a few minutes ago. BlackRock chief investment officer said they're looking at Bitcoin, and Ethereum is a distant second. And that's BlackRock. So what do you think the other institutions? Probably very similar. And so we can see that in the numbers. So these are the individual Ethereum ETFs. This is the individual day, how much inflow or outflows occurred. And this last column is what we're going to be looking at over here, all the way on the right. This last column is the total each day for how much inflow or outflow total out of all the Ethereum ETFs. Now, what we can see here, we're going to go to actually the longer one since the ETFs began. So this is all the data going back to when the ETF began. So we're going to really zoom in on what occurred at the beginning of 2025. So you can see here, end of 2024, a lot of inflows, right? And then into November, outflows. And then end of November, a lot of inflows. Into December, a lot of inflows. And if we look at the price during that time period, right, from November, right here on the chart, from November all the way into January, we saw the price basically, when we're looking at this 1 year chart, in the green. But then it reversed, right? When did it reverse? It reversed basically in the beginning of February. So if we go back to the Ethereum ETF and we look at February right here, again, small inflows, but we were starting to see outflows towards the end of January. Then we saw some inflows beginning of February, and then it basically went down to almost zero, right? We had zero inflow, small inflow, small inflow. And so then what happened is a major reversal, and we started to see massive outflows out of the Ethereum ETFs. You can see that right here. End of February into March, all red, no inflows, hundreds of millions of dollars exiting the Ethereum ETFs. And so when you sell a share and they redeem it, they basically sell the Bitcoin or Ethereum that's underlying in that ETF. So this does impact the market. But we've seen in April, basically from the middle of April through now in May, we have started to see inflows, and we've started to see the reversal. So if this congestion pattern is accurate, and that is what we're seeing here, if we continue to see inflows from Wall Street into the tunes of tens or hundreds of millions of dollars every single day, and that continues over, a few month period, obviously this is going to cause a supply shock, because where is all of the supply coming from? Some people could say, well, these are early investors that are selling. Yeah, that's true, but we're also not even at record highs from previous cycle of about $4,500 or $5,000, something like that. We haven't even hit that from 2021. And so I do think that we are going to see some type of supply imbalance at some point in the future. And I do think that the Ethereum ETFs are going to be a guide for this. But this goes back to the question from the beginning of this video. Is $10,000 realistic, right? Well, based on everything that we just talked about, if the Ethereum ETFs begin to inflow on a regular basis, I believe that the market is going to increase. I don't know why anybody would sell now that didn't sell, unless they need the money, obviously. But why they would be selling now when they could have sold, a few years ago, right? I do think that we're seeing a lot of this congestion because there's a lot of people who are moving their money over the last few months. This chart that Peter Brandt put up shows you this is a long dated, this is a really zoomed out congestion pattern, but specifically where we are today in this like $2,000 range. I mean, I don't know why anybody wouldn't who pulled money out of Solana, which is a lot of people. This is why the valuation of Solana came down 50% from its all-time record high. I would imagine a lot of these people and traders and investors are rotating their gains into other coins that they think that they can do better at. And because Ethereum is at multi-year lows and congestion pattern and hasn't reached all-time record highs and has the most usage, I definitely think that that rotation is going to happen into Ethereum. And again, we can look at the data on Etherscan to actually see the network performance and the metrics, because this is the most widely used blockchain on the planet, regardless of what people say about Solana or Avalanche or Cardano or XRP. This is the chain that people are using. This is the chain they're using for DeFi. This is the most highly interoperable chain. You can look at all of the metrics on DeFi Llama or on Etherscan and actually see the metrics. And we're going to be looking at the metrics in just a few minutes here, especially when we're comparing to the layer 2s. And that brings us to this. James, who is basically a Bloomberg analyst for the ETFs, he said that there's an amended SEC filing that just dropped for BlackRock's Ethereum ETF. It looks like the main change is added language around allowing for in-kind creation and redemption when approved by the SEC. So in-kind creation and redemption basically means that you can go to BlackRock with 10 Ethereum and say, here's 10 Ethereum. I want you to convert this into the Ethereum ETF. And so that's considered a like-kind redemption. And then you can also go to BlackRock and say, here's my 10 shares of the Ethereum ETF. I want this converted into Ethereum. Now, I don't think they're going to do this for like every single person, but on an institutional level, it just makes things a lot easier. And also, I think for tax purposes, it does as well. And this was previously rejected by the SEC, which basically means if BlackRock wanted to convert, like let's say you wanted the Ethereum that's in your share of the ETF, you would have to sell your share, get the cash, and then go purchase the Ethereum. With in-kind, you can skip the selling and the buying. You just basically get from an ETF into Ethereum. It's basically what Coinbase is doing with USDC. They consider USDC the same as USD. So you don't have to convert your USDC into cash to then withdraw. You can just withdraw straight from USDC. It's an auto conversion. Anyway, so this is another big thing that could, increase the institutional demand for the Ethereum ETFs. We're also now hearing from OpenAI Chief Product Officer saying that he sees a future where AI agents will use smart contracts to spend and manage their spending. Very interesting. And obviously, Ethereum is the only major blockchain with the capabilities right now to process large quantities of smart contracts, because it is doing that. I mean, if we look at Etherscan, you can see right here, total number of contracts deployed on Ethereum is 77 million. That's a lot. Anyway, let's listen to what he says here. And don't forget to give this video a free thumbs up. We upload almost every single day of the year. And we're going to be talking about layer 2s in just a few minutes here, because there's a potential that layer 2s are going to perform even better than Ethereum. So if Ethereum gets a 10,000, that's a 4x from where we are today. Maybe some of the layer 2s are going to be doing a 10x, which is going to be significantly more than what Ethereum does if it just hits 10,000. All right, let's listen to the OpenAI CPO.
You're going to want to give agents the ability to go purchase things on your behalf. Of course you are. It's inevitable. But you also are going to want control, especially in the early days when the technology is relatively new. So you're going to want to be able to say, yes, this agent I want this agent to go buy this thing for me, but I only want it to spend up to $50, and it can only do so if it's buying something at a grocery store. And I don't need to care which one, but that class of things. Now I'm a crypto nerd. I'm hoping that this is an opportunity for some of the programmability that you get with blockchains and smart contracts. But whether it's that or the traditional route, programmability is going to be really important. And I feel like it's you guys have been doing this work for years, and now the technologies are coming together in a beautiful way.
Absolutely. And I agree. I mean, we're hearing more and more about this AI implementation, whether they use Ethereum or use a different blockchain. What we're seeing is DeFi being built out. I mean, even the Trump organization is involved in decentralized finance. We're seeing the SEC getting a little bit more involved, the CFTC getting more involved in giving clarity to these platforms, because to me, it seems like the DeFi ecosystem. And by the way, the banks want DeFi. The banks want DeFi. They just want their own DeFi. Like you were hearing about the OpenAI saying it was about control, right? The banks want control. This is why JP Morgan created their own blockchain. They're like, oh no, Ethereum shit, Bitcoin shit, but our blockchain is great. I mean, all the banks are using it. Meanwhile, the reason the banks want their own blockchain is because they can control everything and control the fees and control the flow and all of that. That's not what the core of decentralization is, right? Not having that centralized control, that centralized intermediary, that single point of failure. And so, but the banks want it, right? This is why I think that we're seeing more and more implementation of decentralized finance and the merging of all these technologies, whether it was planned or it's just kind of like the convergence of these technologies together. I do think that we're going to see expansion. Now, whether it's with Ethereum or other blockchains, I don't know. But Ethereum and the layer 2s built on Ethereum are the only ecosystems out here that have the capabilities of what we're talking about, right? With global usage, more than a decade of security and flawless execution for the most part. I mean, obviously there's been issues here and there, but I mean, look at the stats, right? Total number of addresses, 320 million. New addresses in the last 24 hours, 117,000. That's down 20%. Transactions in the last 24 hours, 1.4 million. Total tokens on the network, 1.5 million. Average transaction fee in 24 hours, $1.66. I mean, at this point, when I'm recording this video, it's cheaper to use Ethereum than it is to take money out of an ATM, right? I mean, you go to Vegas, some of those ATMs are $10 to take out money. This is why you should have an ATM card that refunds you, that kind of stuff. But yeah, I mean, it's cheaper to do that. Isn't that crazy? I was just seeing a tweet that somebody was in LA or Chicago or something like that, and they were going from the airport to their hotel, and it was like $100 for the ride. And the person was like, a round trip, that's $200 to and from the airport. I could have just flown somewhere like direct. Anyway, so yeah, I mean, blockchain is definitely cheaper, especially at a much larger level than you're thinking about, like from individual transactions. A contracts verified, 760,000. Contracts deployed in the last 24 hours, almost 6,000. I mean, this is a lot, guys. This is great usage of the network and usage increasing organically over time. And so the fact that Ethereum does have this valuation is pretty unbelievable as well. I mean, where we are is unbelievable. But at the same time, we do have to take into account that it has not performed. It has not reached its all-time record high. And the likelihood that we're going to exit this cycle with the most widely used blockchain, the most widely used ecosystem in layer 2s, not reaching their all-time highs, I find that very, very difficult to see occurring. Now, it could happen because a lot of cryptos in the previous cycle, take Litecoin, for example, Stellar, for example, they did not reach their highs from the previous cycle in 2021. And so there is a potential that Ethereum is not going to hit 10K. But I do think that it's more realistic than not, based on all the things that we just covered, based on the metrics, and more importantly, based on the layer 2s. Alex, who on X says he's a crypto research and financial solution person, he said total real world asset, total value locked, reached the $10 billion mark, right? And we've been hearing a lot about real world assets. This is tokenization. This is making your home a coin, right? That way it can be traded, making a car ownership a coin or a token, right? To show that you own this on chain. And we're starting to see more and more of this with the tokenization sector. Hedera is doing a lot of great work in that section as well. Goldfinch, we've talked about a lot on this channel. Anyway, this sector is leader. Sorry, whoa. This sector leader is Ethereum with almost $8 billion of total value locked in real world assets. And in second place is Polygon with 255 million. And third place is Base, Coinbase's blockchain with 202 million. Over the past 7 days, BlackRock's BITL TVL is up 93%, and Athena Labs is up 257% over the same time period as BlackRock. Unbelievable. And so, what does this all mean? Well, guys, this means that money is starting to be pumped into real world assets, right? Tokenization. This is what we're talking about. This is what, the OpenAI team is talking about. And these guys with OpenAI, if you think that they're not like all of them, like just nerds and dorks and own crypto, I mean, that's literally what it is. I mean, they're all, I don't think anybody who is like an engineer in AI, like doesn't know about crypto and blockchain and the capabilities of it. It'll be very hard, very hard to believe. But yeah, Polygon is the #1 layer 2. And again, people are utilizing Polygon as an alternative to Ethereum. So in my view, Polygon is part of Ethereum. It is Ethereum. So if Ethereum does well, Polygon does well. If Polygon does well, Ethereum does well. And vice versa if it does bad. They both do bad, right? But there's a potential here that we will, because the thing is, you can't really trade Base because Base doesn't have a coin. And that's an issue, right? Because people, they want to use a chain that's fast. And yeah, you can use Base that's fast and fairly cheap. But people also want to invest, right? And so, I guess you could invest in Coinbase, but I'd rather invest in a coin. And so that would be Polygon, right? And so understanding that in the real world asset space, Solana's not there. Cardano's not there. Avalanche is not there. Your favorite other coin is not there. They're not there. And this is the next wave of money that's going to be pumped into the market, right? We're talking about potentially hundreds of billions or trillions of dollars. Tokenizing real world assets, gold, real estate, property, cars, whatever else. It's all being tokenized by Ethereum, #1, and Polygon, #2, and Base, #3. But Base is, I consider it an Ethereum adjacent chain as well. But why don't we see Solana here? Why don't we see Cardano here? Why don't we see Avalanche here? Why don't we see like any of these other layer 1s that say that they're better than Ethereum? But meanwhile, that's not what we're seeing based on the numbers. And so to think that Solana went from $8 to $260 and they're still only have created for us, the world, meme coins, it's hard to believe that that's going to continue to outperform Ethereum and that Ethereum is not going to catch up, or Polygon for that matter, right? Polygon took the lead in the number of USDC active addresses by chain. This is from Crypto.com research at the beginning of May of 2025, and you can see Polygon as the blue. And Polygon has had significant increase since the end of last year. And why is that? Well, we know that Polygon team were at some of the crypto events over the last year with potential, administration people. I do think, obviously, the Trump World Liberty Finance Company is heavily invested in Ethereum-based coins, and therefore Polygon, an ecosystem, not just coins. And so, yeah, I don't know how these things are not bullish, and how people are still saying, but Cryptoviser, Solana's better, this one's better, this one. It's like, how? How is it better? Nobody's using them. And people are like, yeah, but Cryptoviser, this has more usage. It's like, let's look at the data. Let's look at the data. So now let's compare Ethereum and Polygon, because I want you guys to see some of these metrics. I wish I could do it side by side. Maybe I can. Hold on. All right, we got it. So when we look at these metrics side by side, on the left is Ethereum, on the right is Polygon. Total number of addresses on Ethereum is 318 million. And if you look over here on Polygon, it's 502 million. So that means that Polygon has almost twice the number of addresses that Ethereum has. Again, this tells me more people are using Polygon to offset some of those slow transactions, the high fees, and all the other stuff on Ethereum. We look at total number of transactions. Again, Polygon has almost double the number of transactions that Ethereum has, and basically triple the amount of transactions per second over the total, right, over the course of time, with Polygon having 43 transactions per second and Ethereum having 16, which means Polygon is effectively about 3 times faster than Ethereum. New addresses in the last 24 hours, almost 200,000 on Polygon, 117,000 on Ethereum. Total number of transactions. Again, Polygon has more than double what Ethereum has. And so when I look at these, and then I look at the DeFi, and I look at the contracts, right? Contracts deployed, smart contracts deployed, total 51.6 million on Polygon, 77.7 on Ethereum. So you combine these two, that's over 130 million smart contracts deployed on these two chains. Total verified, over 1 million on these two chains. And so I don't know why people are bearish on these ecosystems. Solana, Cardano, Avalanche, we keep going on. None of these other ecosystems come close. And so while those other ecosystems probably do have valuation, right? I'm not saying they're worthless, but they're nowhere near where Ethereum is. And so these are the fundamentals of the network, right? If you tell me, well, I have this great Cybertruck, and this Cybertruck is the most amazing Cybertruck in the world. It's the top of the line. It's worth $200,000, right? And then I show you a Cybertruck that has it completely empty, right? Nobody's using it, doesn't have any technology. Like, which one are you going to buy? You're going to buy the one that's top of the line, that's there, versus the one that can't even drive because it has no technology in it. And so this is what the institutions are looking at. When you go to DeFiLlama.com, you could see the total number of protocols. These are mainly basically like dApps that are deployed on the chain. This is the first column right here. Nothing comes close to Ethereum with 1,400 dApps. Nothing comes close. I mean, look at the Solana, which everybody loves, only has 219 protocols. So you can say, but Cryptoviser, Solana has 4 million active addresses in DeFi. Yeah, because people are trading meme coins. Strip that out, it's not 4 million active addresses. Let's be clear about that. Anyway, Polygon, where is it? Right here. Polygon, 608 total protocols on the network. So half of what Ethereum has, triple what Solana has, right? Nothing comes close. And so I agree, looking at USDC usage, this tells me money is flowing through Polygon more than any other chain. And when money's flowing through an ecosystem versus other chains, it's probably because it's cheaper, it's probably because it's faster, it's probably because they're using other things on that network, other products or services on that network. And so that increases usage as well. And what you're really looking for here in terms of like how to identify, like, is this a good coin? Is this a good investment? It's not short-term spikes in the usage of the network, like what we saw with Solana. Like Solana has, so much revenue. It's like, yeah, because people are trading meme coins. When that stops, everything dropped 97%. That's not like a little drop. That's all. It just basically went from 100% to 3%. Right? So imagine making $100 every single day or every single hour, whatever, these nodes make. And now you're making $3 per whatever. That's a significant drop. And so you're looking for sustained growth. You're looking for organic growth and projects that companies and businesses and institutions are going to be using for a long period of time, whether it's 1 year, 2 year, 3 year, And so I don't know how people don't see any of this. People, maybe they're just blind to it. Maybe they're just not listening. I don't know. Because when I see this, it's so clear. And when people see this kind of video and they're going to say at the end, like, I'm sure there's going to be a comment, but Cryptoviser, Solana is better. And that's it. Like, that's their argument. Solana is better. Like, why is it better based on what we just talked about with metrics? I mean, even Polygon, right? So this guy who's a crypto researcher, he said Polygon's proof of stake peer-to-peer metrics are right here. Most of the peer-to-peer transactions on Polygon are small transactions from $1 to $50 and $50 to $200. People are going to say, well, that's not a lot of money. You're right. But people are not sending, like, let's say I owe you money or I'm paying you for a service, right? Create me a thumbnail for this video. Maybe that's $25 or whatever the cost is. If I send it on Ethereum, it's probably going to be slower and cost more than just doing it on Polygon. 95% of all peer-to-peer transactions are under $10,000. The geography of peer-to-peer transactions has changed dramatically since 2022, with the European region dominating in 2022 and the Americas already dominating in 2025. That's interesting. And this also goes in line with the fact that companies in the US were feeling suppressed, right? They didn't know, is Polygon a security? Is it not a security? Is the SEC going to sue us if we utilize Polygon's technology, right? Now that basically all withered away with the acceptance of crypto as part of the digital world, right? Blind Pay, Lab, Revolut app, and Nexo are leading the way among Polygon payment applications, right? They're utilizing Polygon on the back end. And so when they're utilizing Polygon on the back end, this creates that longer term sustained growth because you don't even know you're using it, but these companies are using it on the back end to process whatever they're processing. And it's using the blockchain's technology, and it's going to continue to do that forever. So the growth that we're seeing, this is sustained growth. It's not going to be a pump and a dump like we saw with meme coins. And by the way, if you're up to this point in the video, don't forget to give the video a thumbs up and also hit subscribe. And let me know in the comments if you're up to this point in the video. Let me know. I'm at that point in the video, 46 minutes. So that way, I know that you guys are still watching. Anyway, in April, Polygon's proof of stake peer-to-peer transactions showed that their maximum of 7 million of transactions, 4 million of these were $1 to $50 and 1.8 million were $50 to $200. That's the majority of the 7 million transactions. So these are small microtransactions that people are making. And this could also be AI, by the way, right? Because if AI is paying for a service or paying for a good, they need to be able to interact like we just heard from the OpenAI executive. So maybe they're already using these technologies. That's possible as well. The total volume of peer-to-peer transactions on Polygon is currently 45 billion or $23 billion. April 2025 set a maximum of $2.6 billion per month. 95% of all these transactions are under $10,000. So this is crazy stuff, guys. Projects such as Blind Pay, Revolut, and Nexo are showing good results on Polygon. Nexo is transacting $22 million per month. Revolut is transacting $18 million per month, and Blind Pay is transacting $13 million per month. And so these are real companies building on Polygon, which is effectively built on Ethereum. Does Solana have any of these? Does XRP, well, maybe XRP has payment apps, but does Solana have any of these? Does Cardano have any of these? Does Sui have any of this? Does Avalanche have any of this? Stellar. The answer may be yes, but I would guarantee it's not at the volume, not at the amount and the sustainability of what Polygon is doing. And so this makes Ethereum the best alternative to Bitcoin from an investment perspective based on the metrics and the analysis that we just did. And obviously there's a lot more. I mean, we've been talking about these cryptos on the channel for years. So we do have a lot more background than if you're a new person in crypto that's learning this stuff for the first time. But even in this video, the metrics that we covered and the conversations and the narrative and the focus does appear that we will have a large run in Ethereum. Will we go above all-time record highs? I think the answer is yes. But I could be wrong. I definitely could be wrong. I would be very surprised to see Solana reach the market cap of Ethereum, with Ethereum not even moving at all. I think that Ethereum would move significantly higher if Ethereum were to break the the $200 billion range, if that even happens. But based on the fundamentals, we can look at Ethereum and we can look at the layer twos like Polygon. Polygon is the premier layer two. And, while the other ecosystems are saying, well, Solana, for instance, says they don't need layer twos because their base layer can process everything. It's like, well, right now it's just processing meme coins. Can it actually process real financial transactions from banks and be the back end technology integrated into these companies like Nexo and Revolut app, like we just covered? I don't know the answer to that question, but apparently the answer is no, or not as effective as on Polygon right now. Otherwise, those companies would have been using Solana. So I do think that we have to look at these ecosystems as one, right? Because Polygon is basically 1% or less than 1% the market cap of Ethereum. But Polygon has more built on it than Ethereum. And so there's a potential here that we are going to see from a percentage gain perspective. There is a very high possibility we're going to see Polygon outperform Ethereum. And again, from a percentage standpoint, because if Polygon 10x is from here, it will only be a $27 billion valuation, and a 10x would bring Polygon to its previous all-time high, a little bit higher than that. To $2.60. The previous all-time high was about $2 and I think $2.90 or $2.10. It's hard to tell because since the conversion to from Matic to Pol, the charts don't match up. But either way, a 10x from here would be only 10% the market cap of Ethereum, which I think is a little bit more in line with the actual valuation of Polygon. But nobody's focusing on Polygon right now because nobody's focusing on Ethereum right now because everybody's focusing on Solana and XRP. Guys, these coins already had their run in the cycle. Will they have another run? Maybe. But Ethereum hasn't really had a run, and Polygon really hasn't had a run. Based on all the technology, based on all the development, all the deployments, and all the current metrics on the market, and with the ETFs continuing to buy, you do the math. You let me know down below, is the $10,000 Ethereum thesis valid and going to follow through, or are we not going to hit $10,000? Let me know your thesis or your thoughts on this thesis down below in the comments. And while you're down there, don't forget to hit subscribe, give the video a thumbs up, and I'll see you guys when I see you on the next video. Invest responsibly and do your own research. And as always, crypto on.